On the local economic front this week, we're expecting the South African Reserve Bank leading economic indicator and the December producer price inflation numbers to be released. Earlier today, I caught up with Carmen Nel, economist at RMB, and we unpacked the economic week ahead. Let's take a look.
Well, nobody really does a detailed forecast on the leading indicator because obviously it gives a preview of GDP, but it suggests based on the underlying data that we should have another month-on-month increase, which means that if you look at the momentum in the leading indicator, it is improving. So what this tells us is that the fourth quarter GDP growth locally should be faster than that in the third quarter, and then possibly that the first quarter should then be faster than the fourth quarter. So the short-term momentum locally is improving.
With that being an improving scenario, I mean, obviously we had the SARB last week maintaining its view on interest rates and keeping things on hold at 5.5%. It's in a context where we've got an eye on inflation. We've seen a little bit of an increase come through on that inflationary front, and PPI data this week expected to remain at elevated levels, but expected also a slight moderation for that December period. So your view on the inflationary scenario we're facing?
Well, just in terms of the PPI specifically, we think it'll tick up from 10.1 to 10.2. Consensus is at 10, so you're right to highlight that it's in round terms still elevated at around 10% year over year. The issue really in terms of the inflation outlook in the short term is how quickly the depreciation of the rand during the second half of last year will filter through to prices. Now, so far, it's actually been surprising how muted that effect's been. So as we saw last week with the CPI data for December, that it actually stabilized at 6.1, which was a positive surprise relative to expectations. I think what we are facing in the short term is the risk of that we move to upside surprises, in part because of the lagged impact of the rand, but also the oil price being elevated, which means we're looking at petrol price increases. But then if we look at the growth picture, if that does moderate after sort of this near-term acceleration, then you could see some disinflation coming through. And then importantly, if the rand remains, strongish, so sub 8 versus the dollar, then that should also cap inflation risk in the medium term.
Where we've got some of those cost push pressures in the domestic supply chain for the month, plaguing, we've seen that it hasn't quite filtered through to the CPI front. Is it just a matter of things catching up on that end and, producers able to cushion things for the consumer to only such an extent?
Well, yes, certainly the one aspect is usually price pressures at the producer level feed through with a lag, so it'll take a number of months for the price increases to be reflected. But also the issue is around pricing power throughout your sort of value or supply chain. And what we've seen is really, it's been a mixed developments have been mixed in terms of pricing power. So what you've had is an increase in competition, in part because of imports, and where there is a lot of competition or import competition, your pricing power is more limited. So an example would be throughout your textile and clothing value chain is where, even though we had at the beginning of last year massive increases in the cotton price, it didn't translate into high clothing inflation, and that's even taking into account the second half rand weakness. I mean, clothing inflation is running at a 4 to 5%, and that's partly because of the sector being quite competitive. So it does depend on what sector you're looking at. So I think that's sort of part of the question is this just a lagged response, or is pricing power being dampened?
Of course, center of it all is the rand and where we're likely to see this local unit headed, Carmen. We've had some bullish bias filtered through for the local unit. Last week, the most bullish forecast we got was 770. This morning, 730 even coming through. Where do your forecasts lie when it comes to the rand and the potential strength that could still well filter through to the local unit?
Well, we have quite a bullish view on the rand, which we've had for some time. Our year-end forecast for the rand versus the dollar is 720. That I think compares to a consensus number of around 790. If you look at the short-term momentum, we would agree that there's significant downside to be had versus the dollar. but obviously, the unit is very vulnerable to risk aversion. What happens to the euro? So for the time being, we agree that a lot of the news filtering out of the eurozone, stronger data out of the US, does suggest that the rand and risky assets in general should be well supported. But obviously, if there's any wobble around, the debt deal out of Greece or the bailout package from the eurozone that could hamper or dampen risk appetite, you'd see that in some weakness coming through in the rand. But overall, our fundamental view is very positive on the exchange rate.